Hello and welcome back to another episode of Fun Friday with a friend here, a fellow Raisemaster member, the founder of Avista Fund, I believe, Igor Shaltanov. How are you today, my friend?
I'm doing good. Thank you, Craig. Thank you for having me on the show. I'm excited.
Yeah. Yeah, super excited to connect with you. I've kind of seen your stuff all over the place. Igor is what you consider to be kind of a content guru. He's great at, posting all over the place and has his kind of systems down there. So I've kind of seen you from afar, and then we got fortunate enough to meet really personally more one-on-one not too long ago, back in February at Raise Fest. So super excited to kind of, expedite a relationship here, if you will, doing a podcast and kind of breaking bread and winding and dining and get to know each other better.
Yeah. Thank you,
Yeah.
Craig. Thank you very much.
Yeah. Yeah. And you've got a very unique background. So from the origins, I know you're an athlete. You weren't born in this country. So do you mind giving the people a background into who you are and kind of your origins, where you came from, and kind of your pedigree before getting into the world of real estate?
Oh yeah, that's one of the my favorite stories probably. So I'm from Russia, Moscow, and what I tell the people, so the in today's world, right? There's a lot of YouTube videos, right? There's a lot of different books, whatever, Amazon, you can order instantly whatever you want, right? Back in 1990s in Russia, was not a lot of Tony Robbinses and stuff, and there's not a lot of like apartment gurus and podcasts. And I mean, that was a challenging on the sense of you need to figure out on your own, right? And like back in my early ages, I heard from my friend, you know what, I'm going to, pick up some cash from people. I was like, what do you mean? Tell me. And I was like 14, maybe years old. So what do you mean by that? So we have spare apartments, so we give it to people and they pay us cash. I was like, wow, what does that mean? So that's the first time ever I heard about real estate investing, and not investing, but actually renting to somebody, right? To giving the place in exchange to money, to the value. So, and speaking about myself, right? I play sports. So my sport was water polo, and because it's a Russian Moscow, right? It was always cold, and like I was frozen. Because for me to get to the workout place, it takes about 1 hour 15 minutes one way, and then coming back as well. But the most fun part was I was like swimming in the pool for about 2 hours, so your body are soaking like all the humidity, right? The water, and then going through the subway, it was about 30 minutes of the line, right? The piece was outside. So, and so it was like minus 20 Celsius, right? And you got the wind, and then it's just frozen cold and you all wet. So my only wish was and I was telling to my mom as well, since I was like maybe 10 years old, like I'm going to move somewhere where there's no winter. So, but I never know it's going to be like the United States, because I never thought for United. I thought it's going to be like southern part of Russia. So, but that's what happened. So we just end up being in Los Angeles, and I'm blessed every step of the way. So
You and I, Igor, share a same war. We both declared war on winter, and I think we're both winning because you're in Los Angeles. Obviously, I'm in Phoenix, Arizona, and I don't do cold weather. When it's 50 degrees here, I become a very bitch. I become a very much of a griper and complaining. I feel cold. I don't feel as good when the weather's cold, but I feel great when the weather's warm. For instance, this morning it was 70 degrees. It was been kind of almost touching 100 here. With where we're at here in the year, and that's a little bit hot, but I love it. So I'm excited for it. But to your point, I don't do cold weather. But going back to kind of your origins and coming here, so it sounded like you had this thirst and kind of initial idea in Russia, perhaps, that you could kind of buy property, rent it out, have passive income. Is that correct?
yes, yes, that's how I started, because I was playing professional water polo, right? And it's been always on the road. A lot of things are taken care of. And my mind was going through like, what can you do? So it's going to be not long term. It's going to be like not really liquid. And the reason why, because when you're young, right, maybe you're not doing the smartest decisions for yourself, right? And then the most important thing was, if I have the cash on hands, most likely I'm going to blow it up, right? So, and that was my thinking. And that was true, right? Because you got all these shiny things. So you got the cars and this, and you can buy a lot of things, right? If you're young, and it's not necessarily important things. And when I started to invest in real estate, I was like, okay, the power, you can feel it right away. Why? Because it's a non-leveraged assets. So you don't get, again, so you're talking about 90s. So there's no banking system. There's no mortgages. It's all cash. So basically, whatever you get in, right, and there's no taxes as well. Sorry, but back then, yes. And then whatever you get, it's like pure profit, basically, right? And that's the mind shift, right? What we had in the beginning, because when I convinced my mom first time ever, so I said, "You're gonna move to the new place, and we're gonna rent the old place," and that was my first ever investment. And she was like, "Oh no, I want to stay," and then stuff, because we got used to that. This beautiful park, this and that. They've got friends. And I said, listen, you deserve to get to the brand new things. It's all, a lot different. Like, anyways, they moved after 6 months of me talking to them. But then when they first time ever see the cash coming in, and the monthly payment was equal her monthly salary. But then she did almost nothing, right, to do that. And then she like worked 24/7, right, to get this salary. And that was the mind shift. That was a paradigm shift of, oh man, you can do this, and then you can just get like a monthly salary for that. And that was a really like change, like a life changing event, I would say, right, for our family. And that's how we get into like investing into the real estate thing.
Yeah, it's a beautiful story. And, everyone kind of comes to their arc and kind of their realizations and the aha moments at different points of the cycle, right? So it's awesome that you kind of started that journey in Russia. And then when did you move to America, and kind of how did that story work out? I don't know it personally, so I'd love to hear it. But selfishly, I just want to know that.
Yeah, the first guy who actually made it, and the first people actually who made it from our side of the family, my wife brother was drafted by NBA team in 2005. So, and that's how we end up being here. But then it was in 2005, and I was still working as assistant judge in Russia. My wife was playing professional, and she stopped because we got first baby. And so that whole NBA draft pick was like, again, that's another life changing event, right? Because now you got to move the whole family. So now they kind of, they start to get the roots here, right? They bought a house and stuff like that. And they say, oh, do you guys want to come and visit? And we were like, oh, why didn't we go? Because November, I would remember 2009, November, it's winter time. It's already covered with snow. And then we actually just built a house. And then she was like, we did so much work through the summertime. Why would we take a little break, right? And go to United States to visit my family. And I was like, okay, let's do it, right? Because it's beautiful, it's warm. And from minus again about maybe 10, sometimes 11, 15, right, was a covered snow, right? We landed in Manhattan Beach in California, and we're going through the pier. And I remember like there's a young kid, like a toddlers, like 1, 2, 3, 4, 5 years old. So they just naked in the ocean, and it's not warm, but it's not cold, right? They naked, and everybody in this, flip flops and shorts. I was like, I've been cheated for the whole of my life, right? There's actually different life beyond right, Moscow and stuff like that. Um, and we never thought we're gonna stay in the United States, but then we had a family person who was helping us with different things. And at the dinner, she said, "Why are you guys coming back?" She asked one question, both of us, right? My wife and me. My wife probably thought about that. I'm thinking from today, but me never was thinking through like we should stay in the United States. And she asked that one question, and I was like, start to think, because I quit my job at the court, and I was like, yeah, I need to start over the whole life. And then I got a young kid, not kids yet, but kid, and then I was thinking through like where's going to be the best opportunity for my family to actually develop, to grow, right, to get the education and stuff like that. And that was another like a life changing event. Was that I called my mom right away, next day, I think, next day overnight. We think through with my wife, and then I said, "Listen, mom, I'm not coming back," because we had tickets on hand. And I said, "I'm not coming back. Sorry. So we're going to stay in the United States." That was another kind of huge paradigm for us, right? The shift, right, of the mind, because I didn't speak even English at 27. I started to learn English, and then there was a lot. There was a lot to change. Anyways, I'm going to stop here. Right?
Yeah, well, that's super interesting. I mean, there's kind of that expression, immigrant mentality, first generational people that move here tend to do pretty well. And the language of English and Russian is not similar whatsoever. I'm sure there was a nice Russian community, in any big metropolitan city, Los Angeles, San Francisco, Miami.
Yep.
I'm sure, some places in Texas, New York, obviously. There's a ton of Russian speakers, but to go to a place where none of that was there is pretty ambitious. So congratulations to you for being, such a risk taker making smart and calculated ones to say, you know what, I'm going to start my life over. I'm planting my flag and I'm kind of burning my boats. And, people think starting from scratch, and then there's really starting from scratch. And when you're talking about, I don't speak English, I'm in a foreign country, I'm moving quite literally across the world, that's like kind of a chilling moment for me to hear the fact that you went from nothing and created such a great life for yourself and your family. So congratulations to you for executing that. So now that you come to America, what is your process to kind of integrating and then finding real estate and going from there?
Yeah, so I think the biggest thing was because we have multiple units in Russia, so and it was like not paid, non leverage. I mean, not a leverage, right? No mortgage on it, right? The first idea was I'm going to do the same thing. So I'm going to do like, and it was apartments, not houses, right? Apartments. And then I was, okay, I'm going to sell that portfolio and then I buy it here. But then everybody lives in single family and we live in single family house back then. And we're like, okay, I'm going to do the single family houses, right? Because if you do the research online, probably that's the first thing to pop up, right? You live in a house, you buy another house, and then another house, and I see it throughout our investor journey as well. So usually it's a people who got a couple houses, they kind of start to see the tension of this management piece, and this is my story as well. So it was like a simple story when I share with people. Oh, I get it. So I understand that. Anyways, and I bought the first house, and it was always in my mind, you need to add the value, right? You don't buy like a beautiful, nice house. And actually, that's the time, I think it's 2013, and that's the time when the bigger pockets start to pop up a little bit more, right? And it was a Josh Dorkin back then, right? The original, I would say, the founder, right, of this thing. And then they just hired Brandon Turner back then. So, and that was the time when I would start to listen. I was like driving in the car because we opened the business. I was driving in the car, right, and listening and listening and listening, right, and just soaking up like what does the United States looks like from the real estate investment standpoint. So, and yeah, and then I was okay, there's a berm at it, so it's not going to work because I have a family, so we're not going to burn anything, right? We're going to probably burn our family if we're going to do that method. So and then and then so I started to look into the, okay, we can flip something, right, and rent it to the people, buy it at the value, right? And this is exactly what I did. I bought a first house, right, and I received California here, and then I just I kind of spotted the place when they added the square footage before we bought it. So it was like a 2,000 square feet already. And then we just need to do like a kitchen remodeling. So just a minor painting and stuff, and then complete remodeling of the backyard. And I hired people. So we did all of it. So we brought the value and then we rented to the people. And there's two lessons I learned. One, you start to leverage, right? Because you need to use the other people money. That way it was the bank, right? So we just, I just paid the down payment, right, and our leverage. And then the second thing was we start to hire people actually to do the construction work. So you got to become the constructor. We just finished the house in Russia, so we actually built a couple of them. So and then it gave me a little bit of the edge. So how to do that, right? There's different, pieces into construction, right? And it was not that painful. But then the pain came when it's all finished, and then I'm trying to hire that first tenant. So we go out and we actually contract with an agent. So and there's people coming through, and I can't qualify them because some people show up. I got the cash. I just missing like $1,000. I'll pay you next week. I was like, that's sketchy, right? And I started to learn this process of like hiring the tenants, which is actually became the biggest challenge in this like specific business model, right? So when we hire first tenant, they live there for a year, I think. And it took me like 3 months to get a good tenant. And then guess who was paying the mortgage? Yes, I was. I was paying both of them, right? Where the place I live and the place I was like, okay, that's a burdensome. What if you 10x this thing? Because always thinking through the 10x, right? Maybe 100x, whatever you're doing. And then I was like, if I 10x the house I have, what's going to happen with me, right? And the answer was clear. So you're going to become property management, right? So, and then you calculate the time you spend, right, and divided by the profit, and you're probably making like $2, $3, $5 per hour, which is you probably go back to McDonald's, right, and get hired at McDonald's and make a lot more doing that. So and then that was my first step into United States, and I'll stop here.
Yeah, no, that's awesome. Well, lots to kind of unpack there. And that's such a typical route. And it's so funny that you mentioned that the single family way is just the journey. I was talking to one of my really good friends today, actually. True story. He called me. He used to do commercial brokerage in the Bay Area. Now he moves out here and runs a equipment finance company. So he's crushing it. But he's bought a couple places, and he just has a massive plumbing issue that came up, and it's going to cost him a lot of money. And he's going to find a solution, but it's kind of going back to, he wants to buy stuff himself, but when you look at the time and kind of the cost analysis and benefit, everything said and done, the syndication route, the larger scale route, starts to make a lot more sense. So that's kind of one thought there. And then the other thought that I have here, super interesting that you mentioned just kind of, earlier on how much harder it was to get good information. This is kind of going back previously in the conversation, but you mentioned in Russia in the 90s, but even probably generally in the 90s, I'm sure there were some people doing seminars here and there, like Robert Kiyosaki, who was always kind of meeting up with people, kind of giving informational kind of conversations, this, that. But the world is so much more expansive now, and the information seems to be at your fingertips now more than ever. You've got, a boatload of free information, like stuff like this, conversations all over the place on YouTube, on Apple, on Spotify. But the access to information and good information was pretty hard. So you could probably get some really good deals, but the masses were not involved in it, right? So kind of very interesting kind of thought there that you alluded to there. But, going through the process of going on the journey of finding out, oh, yes, tenants are tough. Finding good tenants are even harder, ones that you want to rent your place. Sometimes it's not even about maxing out the money. It's about maxing out the person in your property. Super important there. But you went from the single family side. Then you started listening to kind of the informational kind of podcasts, sound like, on Bigger Pockets and other kind of channels there. When did you kind of find the world of alternative investing and capital raising?
It's a great question. So I think thank you, Craig. I think there's a couple of things struck me. The one was when I was listening for Bigger Pockets and Josh and Brandon. So they were saying 99% of the people will listen to podcast, but they will never take an action. And I was like, I don't want to be this 90. So this is my mindset of like, it's scary. It was like very scary. Just imagine, right? I just landed in 2010, right? And then I got it in 2014 and 13 maybe. So, and again, that's just unknown, right? And every time you step into the unknown territory, it's scary, right? That was my first step. And I was like, okay, we got it, we've done it. So let's do something else, right? And the second portion was, again, I start to understand one thing. If you want to 10x this house, right? And you're going to become, because there's a future, right? So you're going to become certain persons. And do you want to become that person? For some people, this is the right way to do that, right? If they don't have a job, no business, and they want to put their energy into something, this is the right thing to do. You got to buy 10 houses. You got to buy 10 houses. You got to manage them your own. You got to do it because that's your full-time job. That's going to be a full-time job, right? But if you are succeeding at something else, let's say you got a killing business, for example, like the equipment finance, great business, right? Great financial business, and you're killing it. So do you actually have a time to dedicate yourself on the side to the real estate, right? And then run that house. And this is the big question. I don't know. So you have an answer for yourself. You got to sit down and really talk through that with yourself, with your wife, maybe with your kids, whatever, right? And really understand what you're going through. Because if you got one property, that might be fine. If you got two of them, that's still probably durable. Not in California, maybe, because it's very demanding. So, but if you got 3, 4, 5, and 6, and 7, this is almost like a full-time job. If you don't leverage that, that's might be not full. If you got it as an inheritance, right, and it's been bought like 20 years ago, that's a different story. You can hire a property management company, right? They're gonna probably take a little advantage of you, right? But you can afford to hire that and lose whatever the profit you come in with. So, but then what I'm saying is, if you like starting right now today, because to buy a single family house like where we at right now in Los Angeles, like it's easily 1 million, right? It's easy $1 million, right? And then you got to put some money into that and stuff like that. So what I'm saying is, for a lot of people, you don't want to get into that second job, like a second full-time job, because your first full-time job, when you succeed, will get to suffer right away, like immediately within like 6 months. You're going to go down there, and you're going to go now you're going to be in between saying, so what should I do? Should I sell this? So what I'm saying, this is my journey. That was my mental journey as well. So that's how I came. I'm trying to kind of connect it to the syndication. So because the syndication, if you do it with the right partner, this is the only true passive investment. It's a private placement, not the stock market syndication, not the the ETF, like real estate investment trust, right, and funds. So I'm talking about the private placement syndication. If you do it with the right partner, so this is the only way when you can call it like it's a real passive thing. Because again, we've been sold. The thing was, I've been sold as well on internet. The real estate is just a passive investment. It's a passive income. It's not. And the reality is, it is not passive, right? And by the time you figure it out, you're so deep in the trenches, right? Now you're like, okay, what should I do? And this is exactly what I did. I just offload my active portfolio into the true, like, passive real estate investing, right? And now the game is, it's all private, and to figure it out, it's another like couple years to figure out the game, right? Because you can't just speed yourself. You can't just click the button and say, oh, I got all the information, I got all the deals, I got all the partners, I now understand what to do, right, with the money. So do you go like this asset class, this location, or this manager, right? So this is where they come in place, like a fund level. So when you got all the different operators and different asset class and different locations, you can put them together. So that's how I started, because I started to think through, okay, if I want to get into the syndication, like general normal syndication, I want to make sure who is the manager. I want to make sure we're in a good location, meaning so the state, it's going to be like I would say it's got to be a lord. That's another problem with California, right? It's not a landlord in California. A lot of times suffers.
It's terrible.
It's just a suffer, right? It's just a suffering, because you go to the court and they say to you, you the person who have money, so you need to pay to everybody, and then at the end of the year you're going to pay taxes as well. So, and then whatever left, which is nothing, you're going to keep it for yourself. I was like, okay, so that's probably like a bad game to play, right? And then what I'm saying is, so you want to make sure you got a manager, location, and asset class, and that was my starting point of syndication.
Yeah, well, that's awesome. So just so funny about the passive income side of things, just to touch on that note, and that's such an important one, is we do get sold all the time. Buy all these rental properties, you're gonna get passive income. Well, is it passive income when the sink breaks and the tenant calls you and you got to sort out 5 different contractors, 3 different handy people to make sure that you can fix that problem? I don't think so. Maybe you're paying out of pocket after all said and done, and now it's $1,000 liability for this year. Now you hope that you get a paid appreciation in the future, but that brings me to the next point, which is appreciation is not free. What do you mean? Well, what do I mean? Appreciation is not free because guess what? You have to pay property taxes. You have to pay homeowners insurance. You also have to have routine upkeep on your property. So yes, you should get disproportionate benefits that outpace inflation and whatnot. And I'm not telling you to not invest in real estate, but realize that there is a time drag associated to this. And I'm sure, Igor, where you're at in Los Angeles, you've got a ton of very wealthy people that turn to people like yourself, just like people turn to us, that say, can you find me opportunities where I can get this real estate exposure? Can you find these opportunities that, I can invest hands off and actually collect passive income? And even there, I don't like the fact that phrase, it is truly passive after that point. But guess what? It's actually pretty active on the point of leading up to get to the point where you can actually receive passive income, because you're still reviewing deals. You're still vetting operators. You're still vetting people that you want to work with. You're still figuring out your thesis pertaining to your investment strategy. So it can get passive once you get to the long-term benefit nature of working with people, meaning you're doing re-upped investments with those individuals. But so often people underrate the journey and challenge to get to that point. So speaking of raising a passive income, this segues perfectly into, Igor, what deals do you in fact raise for? What's kind of your investment thesis within this alternative space?
Yeah. So yeah, that's a good question as well. Thank you, Craig. And I just want to be clear: we're limited partners, but maybe co-GP. Sometimes we don't own the things, right? We have it on a website, right? The list of different properties, and it's got to be clear for everybody. And the most important thing for me, I think it's a team, and what we actually doing as of right now as well, right? We're connecting on a deeper level because from my experience, which is not, again, we only have like 5 years, right, of doing this experience, but then when the deals are not going the right way, so you connect into that person, and then when you see they proactively actually doing something, because I have a different experience. I have experience when you cannot even get the call back from people. So you invested the money with them, and they don't even spend the time to call you back. And the reason why, because all of a sudden you understand that you lost it, or maybe they just, struggling with that. But why wouldn't you just say it to us, right? Wow, because we might be able to help you, like at least, and then we can do something like. But when you're quiet, so we have those experience. What I'm saying is, it's been a journey of really understanding the teams and the people. So, and a lot of times, like I said, so it's a management, right? So we want to diversify that management, and it's a people who's actually doing and controlling that deal, because you can really understand how they're doing when the deal is not going the right way. So when everything is perfect, so everybody is succeeding. So it's hard to understand who's actually doing a good job. But then what we had the last couple of years, right? 23, 24, I would say the beginning of, I would say the end of 24, like already kind of changing, right? And 25 and so much better right now. But then the last 2 years was pretty bad. That was pretty bad. Like being honest, it was pretty bad. So we didn't get into any other deals. So we were struggling with a couple of deals we got into. So, but again, because of the teams and because we tested them with our money, so we understand what they actually capable of at the bad times. Now we have, I have internal right to say to people, so this is a really good operator, go there. Why? Because they've been protecting our money. They've been fighting for us, right? They just didn't stay quiet, right, in the corner, right, by not doing anything. So, anyways, so those are the three probably the most important for us right now. But then, multifamily, what we figure out. So, multifamily, again, we burn on a couple like ground up constructions, and it's a really good business. Again, that's a great business, but there's certain risks, right? When you're doing the ground up development, it does not exist. So has to come to an existence. That's the number one risk. I would put it this way, right? This is the number one risk. There's so many pieces from paperwork to the nails, right? They have to come all together to get this in existence of that building into the future. So this is the number one risk that we figured it out. Like the existing building was a value add stretch, like whatever business plan strategy, right? The structure. So that's what we figure out. Very boring, right? On the States, maybe not super like flashy, and then in locations which is not like popping and booming, right? Those are the ones actually perform the best, right? When there was the down cycle of the market.
Very good.
Yeah.
So yeah, the multifamily existing is certainly awesome. The ground up, obviously, as I mentioned, has got a lot of risk because you've got to create a product, you've got to lease a product, and then you got to sell it at the back end for the highest price yet. That's how it works. And when there's a lot of supply coming online, like we're seeing right now, that definitely makes it more challenging. So it sounds like you're kind of really hunkered down and focused on the multifamily world of things, whether it be construction or value add. Is that correct?
No construction, just a value add. So
Gotcha.
there's
So
no construction. We're not going to do anything brand new construction. So it's got to be existing buildings, a little bit newer, right? But it has to be the business plan inside, not super aggressive, and not like something incredible with like 3x of return, stuff like that. So
yeah. Well, and the other thing that you said as well that I want to kind of just dive into just for a second is kind of going through the process of maybe having bad experiences, maybe having deals that didn't go exactly how you wanted to go. That's kind of the tell and the sign of, a transitioning market, which is obviously happening right now, in fact. So to go through that, to share that with your investors, to share, basically sometimes you have to take that hit so they don't have to in the future is very valuable. And the market is certainly resetting right now, but finding those partners who are good through all points of the process is super valuable. So that said, when you are looking for sponsors and teams, what are you looking for to vet them? It sounds like you mentioned, those who are good at communicating and perhaps those who don't have, too absurdly high return structures. But what else are you looking for, typically speaking, in regard to finding investors or finding kind of people that you'd work with, like groups like Lone Star?
yeah. So and again, it's probably track record. It's a simple, right? So and so there's a couple of groups, right? And we really like the ones who just focus on the area, so they just really present in certain area. So one of the examples, Rise 48, for example, right? Some of their investor, they don't want to even invest with them because they just so connected to the one area, and then that's why they start to branch out, right? So, but for us, again, it's very important because you got office there, you got all the people supporting stuff. They can just act really quick, or they can just pivot. They can change things, and they do really understand what is the present market, what is the local market is. Not to say they got the government connections, they got this connections, they got all the structures right in place to actually support the deal, right? And that's one. The second one we do really like. So when the people saying we're going to lock the rate, the interest rate. We're not going to play with X factor into the future. So we're going to lock in the rate, and then, it's might be a prepayment penalty or something like that, but we want to do the financing with just no X factors, with no unknown right into the future. Because this is, and then in our opinion, that's a little gamble, right? When you do that. And last couple of years, it was, it just proved the concept like completely, right? Because when we started to go into the multifamily, right, in 2020, we said we only choose the product with a fixed interest rate. And then back then it was like, so I'm sorry to say that, it's so stupid because everybody was, oh, why would you do that? You can sell it in like 6 months, or you can
You can float it and have no prepayment penalty.
yeah.
Yeah.
And then, but we said, no, we don't want to gamble with this thing. What if this, right? And then you lock that rate back then at whatever, let's say 2021, right? It was like
2%, 3%. Yeah.
yeah, 350. So, and now everybody looks like a rock star, right? But then the guys who like actually chase it a little bit lower, right? But then they just got killed, right? Just got washed out from the market completely. So, and those are the things again, and it does looks like maybe even right now in the market of finance, right, of the capital markets, it's maybe even durable to do the fixed rate. I mean, sorry, the floating rate.
The
Why?
floating right now.
Keeps going
Yeah.
down. But at the same time, it's again, it's a gamble because nobody knows what's going to be in the future, right? Like no one knows. So, but again, what I'm saying is, in our experience, like based on experience, it was really well working for the fixed rate. Because if it's working right now at this fixed rate, it's going to work no matter what into the future. Why? Because inflation, just simple inflation. If you're not going to do nothing in an apartment complex, the simple inflation will push the price up, right? And then the rents up, and then you already fix your expenses, right? That's like, what can you ask for, right?
The other thing as well, and that kind of fixing and kind of the appreciation and inflation, right? Obviously, you want micro growth, but inflation is inevitable with printing of money, right? The thing to think about is, guess what also happens over time? Replacement costs goes up, right? So that property, just from a material perspective alone, becomes intrinsically more valuable when you lock in that price. And I love the sentiment of fixing and being there. We are generally fixed rate borrowers as well, for the most part. I think the exception that we're looking around in this environment is, it's kind of a jingle and a phrase that I kind of coined in our team calls, which is, if it's below 6, you fix. If it's above 6% on the interest rate, maybe you have the argument and the conversation using smart plays there to, lock the interest rate there. But, to your point, I think you want to be contrarian to a certain extent. So I do believe that there is some value right now in floating, as you just mentioned.
That's why I
But guess what? In 3 or 4 years from now, I think the smartest people will be doing fixed rate only when everyone else is floating, because guess what? You could, in fact, be caught in a market cycle. And if you've got to sell, because you're caught in a market cycle, that could put you in a bad spot. But let's say if you put in, an interest rate of, call it in 4 years from now, let's just say a round number of 5.5% at 10-year fixed. Well, guess what? You could hold it, or maybe you could sell someone on the assumable loan. I mean, to your point there, if you were to kind of rate lock at, in 2020, 2021, or 2022, and you still own that deal, you may be fixed at sub 4%. And people are paying premiums for that because you're going to get probably enhanced cash flow there. So those deals still have actually a market liquidity, but some deals just can't sell right now because, the problems that are going through with regard to the interest rate hike up and, kind of cap rates moving on it, because there is a correlation between cap rates and interest rates there, right? So there's a lot to think on, but from a thesis perspective, the fixed rate perspective is certainly a smart way to go about it. And we generally and holistically view that as well. That said, as we kind of transition here coming up from a marketplace perspective, what's getting you excited about the changes going on? There's obviously, very clear and obvious negativity, but what's making you positive, and, what's kind of some of the messaging you're kind of conveying to your investors about why now is the time?
Uh, I would probably speak from my personal experience. My favorite words of the Will Rogers, I think he said that. So buy real estate and then wait. Because if you, well, again, we are in 2025, right? And then everybody's saying if you bought a property 20 years ago, you're going to look like a rock star, right? But 20 years from now, that's going to be no different, right? And if you consistent, I understand there's different vintages, there's different market cycles, right, and stuff. But if you staying consistent, meaning so you don't do it like, I'll do it for another year and then I switch to something else, right? And then another year passed and then stuff. So now you do it every single year, every single month, whatever your capability is. I'm talking about on the investing side, maybe at the end of the year, but you got to do it consistent. And then 20 years from now, and same as sports, I learned in sports, the superstars, right? It's not the people they born like that, right? Or they got special talent. They do, but if you look at the NBA right now, I'm close to basketball. That's why I'm speaking through NBA, right? Everybody can play. Everybody's tall, right? But then there's something separate 1% from 99%. And then one thing is they consistently working on themselves because every single day. So if you're going to invest in real estate, every single year or every single quarter, every single like 6 months, right? 20 years from now, nobody is going to remember what the interest rate was in 2025, like what type of price. I mean, you're going to look like a rock star no matter what. If you held on to that, you're doing this every single year, right? No matter what the market cycle is. So just imagine yourself, you own a part of Manhattan, right? 100 year, you purchased that 100 years ago. That's insane right now, right? The value of that real estate, just the priceless. So there's no difference between like Dallas, for example, or Texas right now, where you guys at, right? If you invest in Austin, Dallas, Houston, right? At 20 years, 100 years from now, it's going to be so much more valuable. Why? Because look at the amount of businesses moving into Texas. Look at the amount of people on a daily basis. I'm not talking about years. I'm talking about daily basis moving into the state. So those are the fundamentals you cannot go wrong about, right? And with AI, with Wi-Fi, right? I don't know, you name it. The only thing we couldn't figure out the place for people to leave. They still need the place. There's no virtual place for people to leave, to stay overnight. And then for our brain to be able to function tomorrow, you need one thing, you need to sleep, right? And then the cheapest and the easiest way to get into the place to sleep, it's an apartment complex. It's a period. That's it.
I
Right.
love that. That's
And
so well said.
people 100 years from I'd still, and nobody even working on it, right? Maybe Elon Musk got some modules and stuff, but again, so nobody was able, and that's why he's actually doing this, because it's not solved. If nobody was trying to solve it and it's not solved, right, it's not going to be solved for the next 20, 50 years, right? For sure, right? People need a place to stay, and then where are you going to go? An apartment complex.
Yeah, so well said. I fully agree with that statement there. And it's funny, to your point, we don't know the future of retail. We don't know the future of grocery stores. We don't know the future of offices, right? But we do know that you have to live somewhere. And the thesis of, hey, I'm going to provide affordable housing for people, or workforce housing, which basically workforce housing is deemed renter by necessity. Solving for that is a kind of, in our opinion, recession resistant, can't miss idea and thesis that will prove the test of time. And then the other theme that you mentioned there, which is dollar cost averaging in, I can't stress that enough to people, that dollar cost average your investment in over time. We know that historically apartments do, X amount of a period of returns over time. That's even factoring out the great years and the bad years. Okay. And if you are bold enough to invest in 21 and 22, and that investment's not going well right now, well, think about the fact that while our markets reset, when you get outsized returns, it's probably built up the backs of what's happening right now. So if you're crazy enough to invest then, you should be even easier and crazy enough to invest right now. So I love that we're in sync on that. Igor, you've been such a great guest today. Where can people find you if they want to reach out to you, learn more about yourself, and maybe work with you and hear more about your story and origins?
Oh, thank you, Craig. Yes, it's going to be the win because I'm coming from the sports background and I love winning. So yeah, I might not look like that, but I really internally love winning, and probably the first place, the only place for me. And there's a book called winrealestategame.com. So we got the website for that. So you can download the ebook, right? For for the people again who got 3, 4, 5 houses and they probably have certain challenges with that. So again, winrealestategame.com. So you can download the ebook and you can start your journey in syndication. Obviously, website, avistafund.com, and then Igor at avistafund.com. You can send me email. We'll be glad to connect to you guys.
Excellent. We'll add that to the show notes. Igor, thank you so much for your time today. I look forward to seeing you in the future, in the not too distant, or seeing you soon in the not too distant future.
Yep.
Thank you so much who've been listening to the show, and we'll see you next week. Peace.